Welcome to the DeFi Podcast, where we discuss all things DeFi. We host in-depth discussions with industry leaders with a focus on the Avalanche ecosystem. The content of this podcast is for informational purposes only. Statements made by hosts or guests reflect their own beliefs and opinions and is not investment advice. The hosts or guests may have personal investments in any assets being discussed.
Hey everyone, welcome to the DeFi Podcast. Introducing Reth first. Reth is the Elon Musk of crypto. He is the founder of Gravita and founder of upcoming Avant, which will be a game-changing protocol, we think, in the blockchain space, not just on Avalanche. Hey Reth, how are you today?
Doing well. Still not the Elon Musk, but yeah, doing well. Thanks for having me.
I think we have faith in you. Maybe we have more faith in you than you have in yourself, which is fine. Next, Bill, how you doing today?
I'm doing awesome, man. How are you doing?
Pretty good. Struggling through this intro, but I think we'll get there. Bill runs a VC fund, has a long track record as a top market maker on the street. Bill also happens to be the most dangerous guy on the mat at his local jiu-jitsu gym.
Yeah, just because of all the ice cream I eat, that's all. Yeah.
Finally, introducing Jared, the man who was so early to crypto, he used to throw excess BTC away for fun. Jared is a senior analyst at Gogopol. How are you, Jared?
Pretty good. Just, throwing away more tokens day by day just for fun.
So I'm going to be playing host today. I'm the head of DeFi at Gogopol. I'm also a strategic advisor to Avant. So we have a few topics today. I think maybe we can start with the bear market. Red, do you want to get us sort of launch into that topic?
Yeah, so I specifically want to talk about the DeFi bear market. So if you look at crypto as a whole, whether we're in a bearable is kind of debatable, I guess. But DeFi tokens have been particularly hard hit for a very long period of time. So the general kind of consensus is that DeFi tokens have been in a bear market since like 3+ years ago and have never really recovered. So to give a couple of examples of this, MakerDAO is an interesting one that has really substantial usage, massive revenue, 9-figure revenue annually, and is number 52 on CoinGecko. There are many projects above MakerDAO that I've never even heard of, and many others that have very little usage and definitely low revenue. And this, they're down 70% almost from their all-time high, and they've actually been less hard hit than many of the others. There are many projects with pretty good traction that are down 98, 99% from their all-time highs. I think there's a couple of interesting things, a couple of reasons I think this is happening, but obviously we'll open it up for discussion. But I think part of the issue is there's this interesting cultural thing within DeFi where, especially in early DeFi, those who profited the most were those who would just farm and dump. And people will call themselves yield farmers. And a lot of that farming yield is just you go use a protocol and just sell off the tokens that you get for using it. And it was insanely profitable at one point. Early sushi swap farmers, if they were dumping their sushi tokens, were able to make like 8% real yield a day for a while. It's kind of crazy. And so those who performed best in early DeFi were those who are like, I'm not going to be a long-term holder of this thing. I'm just going to farm and dump. And so there's kind of a culture around that. So I think that's part of the issue. Part of the issue, I think, is that we have Bitcoin especially, but also ETH as examples of L1s that had this insanely high upside. And so it's easier to tell a story as a new blockchain that, hey, you get into this thing early, it could have these incredible multiples. So there's this narrative thing as well where you don't have, hey, this thing could be the next MakerDAO, as an example. There has been kind of this, there's been really growing usage of DeFi over the last year. So from a usage standpoint, you could say the bear market is over or, substantially recovered. But valuations haven't really recovered yet. And so, some people in the space, including myself, think that like there will be potentially like a return of interest in these things. They're like, hey, there's real fundamentals here. This thing has a sturdy business. It's growing, has major revenues. It's proven itself over time. And so There's been a view that's kind of a growing view in Twitter that the DeFi buyer market may be coming to an end soon. Like maybe this will finally be like a high performing category. But yeah, curious what you guys think.
So if you look at a chart of Maker, as you said, like as Rhett was talking about, it has not reached it has not been able to reclaim its all-time highs. But since the beginning of 2023, it actually has done pretty well. And I've heard a lot of talk in the kind of liquid crypto community that Maker, is one of the most productive assets in crypto and has just been doing extremely well, especially versus ETH, how it's done. So there's definitely been a bit of a renaissance, since the beginning of 2023 in these coins of kind of Lindy protocols on Ethereum that produce real cash flows and have, especially with Maker, like the big thing is that Rune is really actively engaged in making the project, get back to all-time highs, and the whole end game narrative. Basically, the founder is still heavily engaged in the project and doing a lot. I think recently we've also seen the same thing with Aave. Rhett. So like further kind of proving your point that, Stani is very involved in Aave and they're doing a lot of things, including with their new stablecoin. So this might be the time for a bit of a DeFi renaissance. I think it could be a decent holding this year. Not financial advice. Yeah.
Yeah, I agree. So Aave and Maker have actually, I think, been some of the best performing. They've still like underperformed some of the big L1s, especially things like Solana. But yeah, and they've been the best performing DeFi assets market cap wise the last couple of years, but they've also, both of them have massive usage and real revenues, like substantial. Some of the others that are well known that are, haven't bounced back hardly at all, like LQTY from Liquidity is down 99.5% from all-time highs. And It's still a relatively well-used platform. And Liquidity V2, what they're calling Bold, will accrue value back to LQTY, I think. So some are even more extreme. Yeah,
I'm not that familiar with Liquidity's team. Is the CEO still heavily involved in looking at the project?
Yep, the founding team is almost all intact. The founder's there, CEO there. They're building new products. It doesn't have the kind of revenue or TVL that MakerDAO does. But yeah, even so I think my view is even MakerDAO is still kind of pretty far down from all-time highs relative to a lot of things. But some of the others are down way, way, way more. And, finding projects that have like pretty good revenues relative to their TVL, for L1s and L2s and infrastructure, it's non-existent basically. But for DeFi, you can find things pretty often that have like surprisingly high revenues relative to their market caps. So it just feels like this kind of overlooked category. And so I think there's a chance that it comes back. I do think that game, like we kind of will have to break that cycle somewhat, I think, of like the farming game where, this new project launches. And even if I'm bullish, the way that I use the project is I farm and dump their token. Some projects have experimented with different tokenomic structures to discourage dumping. Some of those have had some good effect, but there probably will need to end up being a cultural shift as well. And value accrual is kind of another piece of this of, growing revenues and maybe like turning on fee switches and things and actually like, turning some of these into revenue share tokens. LQTY, as an example, by the way, has been a revenue share token from day one, and it's still down 99.5%. So that it's not just all about that, but yeah, it feels like DeFi's been in a deep bear territory with respect to valuations for a long time, even though usage, it's by far the most used thing in crypto. Usage of DeFi has been like really substantial for a long time.
Yeah, that's right. I mean, I'm not that connected to Jeff. I'm not that connected to the NFT community, for example, but, NFT has had a huge heyday and now it's kind of died down. And I really don't see much about NFT activity happening. I mean, again, I'm not that connected to the ecosystem, but DeFi is also down, but I use it all the time and it's super active, right? So I kind of see what you're saying. Like it does seem to be like the one use case in crypto that we just keep using all day, every day, right?
So I have two things to say on this topic. The first one is that to me, looking at an L1 or an L2, but looking at like a chain and then comparing that to a project running on a chain doesn't make a lot of intuitive sense. The projects that are running on chain are really like companies, whereas I think the L1s could be viewed as companies, but I think they can also be viewed as money. And it's not clear to me if that thesis is going to take hold and we're going to, in the future, view BTC or ETH or AVAX or other L1 gas tokens as money. But you have two theses that are very different from one another. Very easily, you could see people want to get away from the US dollar, so they're moving into ETH and BTC. But that doesn't necessarily mean that there's more DeFi usage, right? Or that DeFi should be worth more. This applies to gaming and NFTs and other projects as well. So I feel like there's like general confusion in the market when looking at crypto. And I guess my second thought is I obviously love DeFi, but there's been a lot of money lost in DeFi. Investing in DeFi products or projects is really risky for a multiple number of reasons. So the reward you get for investing in these projects should be pretty high. My sort of current perspective, and I think these are hard companies to value because it's a very young market. We don't know the eventual future. We're very like early in the sort of story of DeFi and crypto. But I think maybe DeFi is just becoming priced correctly and the rest of the market is still in this like effervescence kind of stage, is my thinking. Maybe we can move to the next topic. I think we wanted to talk about, again, the election this week. So we're turning into a political show, but obviously going to affect crypto quite a bit. So quite a bit of news on that. This week we saw rumors that Gary Gensler would actually be attributed a higher level post in the new administration if they were elected. The Democratic platform came out. It's a 92-page document, and there is zero mention of crypto. So Crypto for Harris movement seems to be fueled by not a lot. And there's also talk about quite a list, but also talks about taxing unrealized gains, which would obviously affect any crypto project, but also affect just tech in general, or actually the economy in general. Like anyone who is starting a company would potentially receive a tax bill for something they haven't sold yet, right? So something that is only paper gains, now they have to actually trade that for actual revenue from their own pocket. So yeah, just curious what you guys think about this situation.
A couple quick things. So first of all, the Gary Gensler potentially being reappointed if the Democrats win. I did see that online that maybe that was a bit of fake news, that there was no official announcement. But the point remains, like, essentially if they wanted to, the left could very clearly signal that Gensler is not going to be reappointed. I mean, they could just get rid of him right now, right? But they're not doing it. So
the fact that it's a credible possibility says a lot, right? Like the fact that we're not sure. Right. Yeah, says a lot.
That's right. That's exactly. They could make it abundantly clear by having the guy move out now, but they're just not doing it. So yeah, I mean, the having no mention of it at all in the Democratic Party platform, that to me was more disappointing. But again, like I'm trying to tune out. Probably like most of us, I'm trying to, as much as I can, tune out politics, but it's hard. The other thing, what was the third thing that you mentioned, JF? The third point that you made?
Unrealized capital gains.
Oh, right. So I read about that one that it was only for individuals who are like worth more than 100 million, and I guess they're trying to do that to punish the really rich people, I guess. I mean, I don't think it's going to pass. Like if they pass anything like that, all the markets would just tank, right? It just creates a ton of sell pressure, and it would be a disaster. So I think it's more of a campaign tool. I did see a counter take by someone on Twitter that's really smart named Good Alexander. And he was like, this would actually be great for liquid crypto funds or just liquid funds in general, and bad for private equity because, basically these private equity guys get to buy in stuff really early and then they get to hold it for a long time and then dump it on the public equity markets. And that would cause basically the private equity markets to lose and kind of liquid investors to win. Kind of a bit of a counter take I thought was kind of interesting. I don't think it passes, but definitely a bit of political gamesmanship going on.
Yeah, I agree with that. On the Gensler thing, I saw what seemed like a relatively credible rumor that possibly Gensler spread the rumor about himself being like the next Treasury Secretary. And that who knows if that's true, but I wouldn't be surprised. The guy's not exactly my favorite, but I think it did what it did demonstrate is the Democratic Party definitely has not signaled very well that it's pro crypto. So the crypto reset definitely hasn't taken place, because people kind of took that seriously, and there was nothing else to point at to say, well, it's probably a stupid rumor because look, they are showing these things that are demonstrating that they're not so anti-crypto. So it's still TBD, but I think most people, including myself, are becoming a little bit less optimistic about the crypto reset of Kamala, which is disappointing. I still think that even if there's no crypto reset and Kamala wins, it's unlikely to get that much worse than it is now. There are some levers that they could pull that they haven't pulled, but they've pulled a lot of levers, and the SEC is losing all of its cases, and so the courts are starting to protect us. So it probably, even if there's no reset, even if she wins and goes as hard as Biden has, or harder, there's only so much more damage that can be done, I think.
Jared, what's your take on this?
I'm going to continue making my bull case for pretty much any side of this, but definitely the side that's going to just spend more money on giving away free things. And this actually kind of connects to my next topic that I'm going to bring up. But ultimately, you're not going to stop people from using crypto, no matter how hard you try to regulate it. And the longer you continue to just print money out of thin air, fund things that are kind of ultimately worthless, the more that money is just going to end up flowing into probably equities, but also a lot of it's going to flow into crypto. So one way or another, if it's a pro crypto platform, I think that's good for crypto. If it's an anti-crypto platform, I still think it's good for crypto because I don't think you can stop it.
Hey, do you want to just take us into the next topic, Jared? I think this is one that you wanted to address.
Sure. Yeah. So it does flow right into my next topic, which is on Justin Sun winning a defamation case against a Chinese media group. They were making claims that he was doing all sorts of illegal things in China and that something should be done about this. He filed a defamation case against them, and he actually won, which is surprising. Ultimately, he won because they didn't have any evidence to prove their claims. Just the fact that he won this case in a court in China, some people are suggesting that China's views on crypto are starting to soften a little bit after the past couple of years where they have claimed to ban crypto transactions and mining and investments and all this stuff.
They've oscillated quite a few times, right? Back and forth?
I don't know really if they've been oscillating. I think they've been trying to double down on it, but I think ultimately it has been largely ineffective. And whether or not that ineffectiveness is due to people wanting to get into it regardless, or if it's just all talk and they just make it sound like it's a really big deal, but then they actually don't do anything about it. I'm not sure which side of the pendulum that situation is on, but yeah, ultimately I did some looking into it, and it was back in early 2021 or before 2021, China really cracked down on crypto. They decided that they wanted to ban Bitcoin mining. They wanted to make this whole system illegal. I'm guessing they want people to be using the currency of their country rather than digital currencies that are not of their country. And so they made a big show about it. They banned Bitcoin mining. But really, it was never super effective, because if you look into it, when you look at the Bitcoin mining map even today, like this is a Cambridge Bitcoin Electricity Consumption Index. Today, mainland China still accounts for 21% of all Bitcoin mining. If they truly were trying to crack down and ban the mining of Bitcoin, the question would be, why are they still so prevalent in the mining game? So one of the things that happened once China announced this whole plan to get rid of Bitcoin mining and get rid of crypto transactions, a lot of the businesses in China that were running mining facilities just switched to creating subsidiary companies in the United States, getting public funding for those businesses, and then just running their operations in the US. So, last point I'll make is that people have been rumoring that due to the largely ineffective measures that they've taken against crypto, the potentially softening stance of crypto in, for example, like Hong Kong, and just the fact that it's never really been super harshly enforced in China, and this big defamation case win. Some people are suggesting that China may actually flip and unban crypto in China, which would be an interesting play because if it's a large portion of these mining companies just flipped over to mining in the US after the ban, they could potentially flip back over to mining in China if they actually make it favorable there. And this could actually be unbanning crypto in China could bring this big surge of business back to China, strengthening the Chinese economy and hurting the US economy. And again, good for crypto because that would just be more people getting into it. I know that was long, but I'm curious about your thoughts about all these different.
China's been interesting for a while in that mainland China has banned crypto like several times, but Hong Kong is like one of the most like crypto friendly places. They're kind of already playing both sides of the coin. There's a lot of big crypto liquidity in China. It's from the liquid participation side of like DeFi, for example. Some people think that China is like the number one, as far as like country with the biggest user base. It's not always easy to tell. But yeah, I could see that creating like a much bigger surge because if it's already used heavily, even though it's banned, there's likely a lot of pent up demand and interest there. So yeah, I don't know if they go ahead and unban it or if they try to still play both sides for a while and have, Hong Kong be friendly and mainland be unfriendly and then, see, take that as an experiment or something. But yeah, I'm pretty optimistic.
Yeah, I think it's an interesting situation when they claim to have this really strong stance against crypto, but it's never really stopped people in China from using crypto. Binance continues to operate. I think it was either a year or two ago they did $90 billion worth of transactions in China. So like it still shows that crypto in China is very strong, and I think that could be a little bit of foreshadowing for what could potentially happen here if we end up with a super anti-crypto government and they try to, put regulations against it and put bans against it. It doesn't necessarily mean that, crypto in the US is actually going to really see any real negative decline.
Yeah, can I just give my oversimplified view on China and crypto, which is really simple. It's basically like in 2021, the government really cracked down there and Bitcoin and the whole crypto market tanked, but we came back. So I don't think they're going to do that again. There's not going to be a huge negative. On the flip side, there's a huge potential upside for us because I have no idea what's happening in the Asian market. Unfortunately, I'm just totally ignorant. But at the end of last year, all of a sudden inscriptions just showed up and basically clogged every chain and just, became, I think they burned over 1 million AVAX and a bunch of, they basically used every single blockchain, just like this massive surge in demand. I remember we went from paying like cents. I was paying like a few cents per swap on C-Chain to paying like $70 per swap on C-Chain. It was just like this absolutely massive surge of demand. And, and then it went away. But like what I'm anticipating, I wouldn't be surprised if some sort of massive use case came out from the East that we basically have no exposure or idea it's happening. And that could be like a potential upside for crypto. Whereas like the downside, I feel like we already experienced it and survived. So yeah, bullish. I'm going to be brief with this because it's been covered in every podcast, but there's a part of it that I think is worth mentioning here. So, I mean, WBTC, I don't really use it, but I've seen it, or, all of us have seen it around. Basically, it's this wrapped asset where you can deposit your Bitcoin at a company called BitGo and then mint WBTC on Ethereum and then go use it in DeFi. It's pretty big. I think it shows it in the chart there. It's roughly about $9 billion in market cap. And, didn't really hear much about it until a few weeks ago when there was some controversy because I guess BitGo announced a partnership with a company associated with Justin Sun. I think it was Bit Global. And, essentially like people are worried that one actor, Justin Sun, or a company that Justin Sun has some influence over, is essentially going to be able to have control over the entire supply of, WBTC. So I think it's like a 2 out of 3 multi-sig or something like that. Or no, I'm sorry. There's 3 private keys, and Justin Sun would all of a sudden have access to 2 of those keys. So there's a bit of FUD going around on crypto Twitter. I don't really know that much about Justin Sun. Like I said earlier, I'm woefully ignorant of what's going on in kind of the Eastern crypto markets, but he's obviously a super savvy crypto player, and he's, constantly buying companies that have collateral on their balance sheets. The thing that made it bigger news here was that on the MakerDAO forums, someone proposed that they remove WBTC as collateral so that you couldn't use it to mint more DAI. And I don't know where it stands right now. I think, Rhett, maybe you were saying that they haven't yet said that they're not going to use WBTC as collateral, but still there's a very active discussion happening on the forums there. So the supply of WBTC is staying roughly active despite the fact that there's this very vigorous debate happening about whether or not to list it on delist it on Maker. So I bring it up only to mention that there are various forms of wrapped BTC on many chains, and there's one that I want to bring up that's on Avalanche that's really interesting, which is BTC.B. Yeah, thank you. So this is a chart of BTC.B. This is essentially Bitcoin that has been bridged directly from the Bitcoin chain to the C chain. And it's not at a centralized custodian. This is like a, non-custodial solution. Avalanche built this bridge with SGX technology, which is basically these processors that you can load up with code, and then no one can tamper with it without, it's very difficult to tamper with the code. And I believe it's like a 6 of 8 multi-sig. Essentially, they have these 8 wardens. And you can see like the supply there recently has started to go up. If you look at the top right chart, the supply has started to go up because there's great boost incentives on Avalanche. So for example, right now, if you have WBTC on Ethereum and you deposit it on Aave, you earn something like 8 basis points. It's essentially nothing. But if you bridge Bitcoin over to Avalanche and you deposit it on something like Benki, you can earn around 2%, which is still not great, but it's much higher than Aave on Ethereum. And there are some leverage vaults like on YieldYak where you can earn something like 5 or 7%. So, this seems to me to be one of the many potential ways to get Bitcoin on chain and make some money on it. The problem with Bitcoin often is that it's just difficult to earn yield on it, unlike with Ethereum or Avalanche. So I'm just want to put this out there in case anyone wants. And there's one more link I think that we showed that has information about the Avalanche bridge. So Avalabs is one of the wardens, but then they have a number of other partners. So it's not like the keys are in one person's hand. So it's not as secure as assets that are just being secured by the C chain, but it has a pretty rigorous security system set up here, which you can read about. And if you guys have any other WBTC alternatives that you'd like to mention, be happy to discuss those as well.
Yeah, this is an interesting one. I've noticed there was already kind of like a heating up competition with Bitcoin solutions. There's all the Bitcoin L2s that are launching. A lot of people, I think, want to use their Bitcoin more productively. So BTC.B that you mentioned, the one that's considered kind of maybe the most secure / decentralized in the Ethereum world is called Threshold, TBTC. That's picked up at least some mind share. I'm not sure what its TVL looks like currently. There's some others that I've seen launching, FBTC and some others. And then 2 other things to note that are kind of interesting. One, there's some people building a more trustless Bitcoin bridging on BitVM. Some of that stuff's still under development, but I think there'll be some interesting things coming out of that. And then there's been this growing interest around Bitcoin L2s. Bitcoin L2s, you might say, are not exactly L2s in the way that like an Ethereum would mean it, but there's a lot of growing interest. And the way some of these work is they're proof of stake networks, like some are even EVM proof of stake networks, but you stake Bitcoin. And then you get paid transaction fees from the network. Gas fees in the network are paid in Bitcoin. You're staking Bitcoin and running a validator, you're getting paid in Bitcoin. I think this is likely to lead to a rise of like Bitcoin LSTs that have real yield being generated from network activity. Now, the size of that yield will depend on how much adoption these Bitcoin L2s get. But I think that's an interesting place to just watch. And if those Bitcoin LSTs end up being, high yielding, if there's a lot of activity there, my guess is they start getting exported elsewhere also, where you might have some Botanix Bitcoin LST that has high yield that gets bridged over to, Ethereum Avalanche, Cosmos, etc.
Yeah, I've noticed one other upcoming solution for doing this kind of Bitcoin to secure L2s or other, L1s in a sort of eigenlayer kind of model. I'm not exactly sure how the mechanism works, but there's a project called Babylon, and they're setting up a system in order to allow fully on-chain Bitcoin locking and slashing. They're non-custodial. They don't actually take control of your Bitcoin, and that uses actual on-chain Bitcoin scripting, however that works.
I do know that there are some people in the Avalanche community that want to build or want to fund someone who wants to build an Avalanche or an Avalanche chain that uses Bitcoin as collateral to validate. I would love to see something like that. If anyone's interested in doing that, message me, message anyone on the team here. I think we could definitely get some interest going around that.